Namaste, my dear friends. In the last class, we understood by discussing elaboratively the concept of valuation, value of supply. We invited the attention on the part of section 15, subsection 1, subsection 2, under that class A to class E, followed by section 15, subsection 3. We referred to identify the transaction value in the case where the price has sole consideration, supplier and the recipient of the goods or services are both are not real parties, then we refer this particular pattern of approach to arrive the value. Now I am referring to you the section 15 subsection 4. What is it is? Valuation in the case where if there is no sole consideration. Valuation in the case where if the supplier and recipient of the goods or services, if they are related parties, if they are distinct persons, if they are principal and agent covered under the schedule 1, point number 3, likewise. And furthermore, we have some valuation under the valuation rules by inviting from the rule number 27 to rule number 31. We have to consider for valuation. If I wanted to invite section 15 subsection 4, which comes into picture only in the case where the price has no sole consideration. The price, suppose the deliberately reduce the price to evade the tax, or otherwise in the case where the supplier and the recipient are related parties, or if they are the distinct persons or the principal and agent. In such circumstances, section 15 subsection 4 says refer the valuation rules. We have valuation rules right from rule number 27 to rule number 31 we have here. Furthermore, we have valuations for the specific category of a supplies. Rule number 31 cable A in the case of a lottery. Rule number 32 is that there are various supplies has been incorporated how to arrive the value, which general we refer. But strictly speaks, if the price has no sole consideration, or if the supplier, the recipient are related parties, or if they are the distinct persons like head office, branch office having multiple registrations and transaction between them, how to arrive the value, or principal supply the goods to agent, how we should arrive the value. These are going to consider under this category for valuation. So, my dear friends, now I am inviting attention on the part of section 15, subsection 4, followed by rule number 27 to rule number 31, which I am going to refer to you one by one as follows. Here, if you refer, my dear friends, the section 15.4 comes into picture. Rule number 27 says that value of supply of goods or services where the consideration is not wholly in money. That means partly in cash, partly in kind, the consideration is paid. Even if we refer the definition for the term consideration, which very clearly stated that consideration, money are equal to money values, is called consideration. In that case, how to arrive the valuation as per rule number 27 if there is no sole consideration. In this regard, I am bringing to a notice, my dear friends, the diagrammatic presentation to consider this particular valuation. this one under value of supply. Valuation rule number 27. It says that if there is a undervaluation, how can you say undervaluation first of all? Sir, a case where I sold my new laptop to a customer for rupees 20,000 in exchange of the recipient, namely buyer, old laptop is given to me. In exchange of old laptop, I give a new laptop. Actually, the new laptop cost is not 20,000 because the buyer is giving to me his old laptop. In exchange of old laptop, I am giving the new laptop for rupees 20,000. Then in that case, what is the open market value of the laptop? Sir, I used to sell in the market not less than 30,000, sir. Such a product I given to a buyer at rupees 20,000, sir. That means your valuation is not 20,000. Your valuation here is in terms of what we can call money value plus non-monetary value. Meaning thereby money value rupees 20,000 plus old laptop of the buyer what you received, whose equivalent money is rupees 10,000, together 30,000. Hey, Mr. Supplier, your valuation as per the open market value should be 30,000. If there is partly in kind, partly in cash, consideration is received, then the total value of consideration, which is none other than open market value, should be considered.
Sir, when we say open market value,
Go ahead, further.
it is not
Fine. If we have confusion, if we have information inadequate manner to consider open market value, you have some suspicions on the open market value, don't worry. Rule number 27 B says that if open market value as per rule number 27 rule number 27 clause A is not in a position to arrive the value, if you have doubt in arriving that value or that value is not appropriate, if you feel, in such cases rule number 27B says I will provide the valuation which is equal to sum total of consideration equal to money value. Meaning thereby open market value of a new laptop should be considered. If open market value of new laptop is rupees 30,000, when you sell at rupees 20,000, I assume that this particular old laptop value will be equal to 10,000 rupees. If you say, sir, old laptop value, how will be 10,000 rupees, sir? It cannot be that much worth, sir. In that case, how to understand, sir? Refer the open market value available for the given product is available, sir. What value? 30,000. That will consider. Sir, open market value rupees 50,000, sir. Take it as open market value. Sir, sometimes I am not in a position to look into open market value, sir. Exact value, not possible. In that case, what is the open market value? Means what? Arm's length price. Means what? Fair market value. Means what? The price relevant for the given product, the given service. If you say anybody, Rafi sir classes, after 20 years of my experience, if I am offering the crash course only for rupees 200, is not right valuation. Hey, Mr. Rafi Academy. Rafi sir classes, that too he is taking almost 60 hours, 200 rupees. Sorry, more or less, it is equal to how much in the market? Generally, rupees 5,000. No, sir. 5,000 rupees is cannot be considered as such, sir. There are people who will offer even lesser or more, sir. Plus or minus 10% acceptable from the open market value. If open market value is rupees 5,000 means plus or minus 10% means it may be go to 5,500, it may be come down to 4,500. In that range can be decided. That is suspicious. Don't worry. We are not saying hard and fast rule to be open market value even though inadequate information available for deciding open market value. Coolly come to rule number 27B, but it should be in that order. First refer open market value, which is available, go ahead with that. No confusion, go ahead. If that is confusion, it is inadequate, then refer to 27B. Rule number 27 clause B says that sum total of consideration equal to money value. In that case, what I supplied, new laptop, and what I received, money, how much? 20,000. Then old laptop value in the open market value, generally open market value, or the old laptop valuation when arrived is functioning, sir. But what happened? Keyboard has been broken, sir, but functioning well, sir. In that case, okay, rupees 5,000, sir. Keyboard not broken, sir, functioning, sir. Old version laptop, sir, working well, sir. Okay, let us say rupees 8,000. So depends upon the genuine way of valuation. Accordingly, you decide the value. One way or the other, I will say one example here for a kind consideration. My name is Info Private Limited. Info Private Limited appointed a security person, namely a security bureau, to protect the properties. So here, 100% safe and secure private limited, 100% safe and secure private limited, providing security services to Info Limited. Very good. Monthly, Info Limited paying as a security service charges 1 lakh rupee to particular security service provider, 1 lakh rupee monthly paying. In 1 month, what happened? Info Limited provided the uniforms, dress code, uniforms purchased and given to security personnel of the service provider. In that month, the security service provider received from the Info Limited only rupees 20,000. What is the open market value? 1 lakh. This is what we are paying regularly. For 1 month, what happened? Rupees 20,000 only he received from us. That means we paid rupees 20,000 rupees. But in that month, what happened? We have provided consideration to my supplier in kind, which is cloth. What is the worth of the cloth which you provided? Almost rupees 80,000 rupees, sir. More or less, it may be 88,000 rupees also, no problem. Plus or minus 10% acceptable. So you considered the quantity given, namely consideration given in kind, what approximately rupees 80,000, and add to that 20,000, resultantly the value is 1 lakh rupee. Now it is under which category of valuation rule? Rule number 27B. See, rule number 27A is in consonance with the rule number 27B. If rule number 27A is not in a position to determine correctly, come and refer rule number 27B. If rule number 27B also difficult, sir, how can we say that the worth of the material is not rupees 80,000 rupees, sir? It may be worth of the material hardly rupees 20,000, sir. 30,000 rupees only material is supplied, sir. Oh, supply the material only rupees for 20,000 or 30,000. Paid consideration 20,000. 20,000 plus material value hardly 50,000. That cannot be considered as adequate value because open market value is 1 lakh rupee. Then in that case, don't come to rule number 27B. Go with rule number 27A itself. So it is the way in which you have been looked into and determined. But if you have guilty mind, if you have the intention to evade the tax, if you want to commit the fraud, you want to hide the transaction, you have to suppress the information, then the department will be take the action against you. See, department coming forward and telling you, if in the case of these transactions practically genuine take place, don't worry, Mr. Gentleman, being a taxpayer, you take rule number 27A, open market value. If not, come to 27B, sum total of consideration equal to money value. If that is also difficult, no problem. We have rule number 27 class C. Accordingly, you decide what is the rule number 27 class C, which says that like kind and quality of the goods or services, like kind and quality of supply, like kind and quality available. What do you mean by like kind and quality? Means my name is Featherlight. I am providing office furniture, highly durable furniture. If featherlight wala there is undervaluation, or featherlight wala is provide the value for the given supply is not appropriate value, open market value not available, no problem. Sum total of consumption equal to money value, difficult to arrive, no problem. Like kind quality of the goods, valuation will be whole good. Meaning what? Like kind quality. Hey, featherlight, in which month, which year you supplied the goods? Sir, January 2024 I supplied, sir. January 2024 supplied. Okay, it is not a correct valuation. In that case, rule number 27C says that par with your category. Meaning what? Compare with the competitive price at your par. That means my competitor Godrej company, sir. My competitor is a Reliance company, sir. My competitor is Demoro company, sir. Furniture considered. So their branded names. If that is the case, sir, Sofa 33, sir. One more brand company, sir. So okay, fine. Take that particular range of your category. That other person supplying at what price like similar products. That will be the whole good. That will be whole good. But you should not compare featherlight furniture, office furniture products with a particular furniture shop wala who has shop roadside, unbranded, unorganized sector supplier. You shouldn't compare, because at arm's length price, one cannot compare 10th class student with the elementary student. 10th class student should be compared with the 10th class student only. So in that case, like kind and quality should be considered. And don't forget the time factor. In the month of January 2024, the featherlight supplied the goods. Compared to Godrej company, more or less in the month of December 23 and January 24, in that range price available for the given product. In the case of Godrej, that will be considered. Godrej company prices of 1971 should not be considered, which is outdated one. So like kind quality, sir, difficulty arises, sir, to identify like kind and quality, sir. I know products, sir, I have manufactured a new product, sir. So far there is no in the market trading it is. So first I only invented this product, sir, and I have given at a far lesser price, sir, which is not having sole consideration, sir. In case, if that is the case, rule number 27 class C also be not applicable. Come to rule number 27 class D. Rule number 27 class D says that, refer rule number 30, arrive the value. What is the rule number 30 says that cost of production plus 10% as a profit margin on such cost of production. Or in the case of a service provider, cost of services plus 10% thereon. In the case of a trader, cost of the goods plus 10% thereon. 10% from where I got? From the rule number 30, which is decided by the government upon the recommendation of GST Council as industrial profit, whatever may be the industry belongs. Sir, I belongs to food industry, sir. My profit margin 200%, sir. 200% profit margin, keep it with you, no problem. But when you come for valuation rule, rule number 30, it is only a thumb rule, 10%. So how to arrive the cost of production, sir, in the case of a manufacturer under rule number 30? Refer the cost accounting standard number 4 issued by the Costing Institute in the case of cost of production for captive consumption, where prime cost plus works cost, add to that administrative overhead relating to production, but do not add finished goods opening balance, do not deduct closing balance of finished goods. We don't want to find out cost of sale, we want only cost of production. And while deriving that cost of production, you should be aware of it. Abnormal expenditure should be avoided. What do you mean by abnormal expenditure? Sir, the factory wala taken the machinery on rental basis for 12 months, per month 1 lakh rupees, sir. rent, whether use or not use, rent has to pay. So machinery taken on rental basis. After that, after a couple of months, this machinery got breakdown of the machinery. How long? 2 months, sir. In spite of that, each month 1 lakh rupee has to pay. So I paid 2 lakh rupees, sir. The 2 lakh rupee, namely breakdown of the machinery, is known as abnormal expenditure. That should not be considered while arriving the cost of production. Says cost accounting standard number 4. Further, you should not consider cost which is capitalized. What do you mean this, sir? I will tell you. I have purchased the machinery for rupees 1 lakh, incur the cost of installation 20,000. So I have paid almost 1 lakh for machinery, installation expenditure in the factory 20,000. As per the Companies Act, as per your accounting norms, the cost of installation of the machinery will be form part of the cost of the machinery. Therefore, it is capitalized cost. Hence, the cost of installation of the machinery should not be considered as your factory overhead, which is the capitalized cost. Then what is to be considered? Whose depreciation should be considered? Now, capitalized cost how much? 1,20,000. 1 lakh machinery, installation 20,000. On 1,20,000, the depreciation will be form part of the cost of production. Furthermore, I am presenting for kind consideration rule number 30 by inviting the attention on the part of the cost accounting standard number 4. In case of supplier of services, direct expenditure plus indirect expenditure, direct cost plus indirect cost, total cost to provide the services, on that 10%. Manufacturer, cost of production, on that 10%. How to arrive the prime cost? How to arrive the works cost? With the master in costings, cost sheet it is. For a trader, sir, direct expenditure, purchase cost of the material, purchase cost of the goods, very good. Indirect cost, carrying cost, sir, the safeguarding cost, sir, protecting the goods, sir, incurring the rental for the godown, sir, to safeguard the goods. Thereafter, security charges are paid, sir. Transportation charges, loading and unloading charges, sir. Okay, fine. Now you are going to sell the goods. Yes, sir. If so, what is the cost incurred so far? So much, sir. Sir, it comes to almost rupees 90,000, sir. Add 10%, which is 9,000 rupees. As per rule number 30, it is 99,000. Now, in the case of a manufacturer who manufactured the goods, to identify the cost of production, he came to know that cost of production almost 1 lakh rupee. And while doing the manufacturing activity, scrap generated. The scrap is sold by the manufacturer. There is a payment realized. How much? 10,000, sir. Cost of the production almost 1 lakh rupee, and while producing the goods, this is scrap generated, which is I disposed of, sir. I got 10,000 rupees, sir. Is it revenue recognition? Absolutely not. In your process costing, you are aware of that. The sale of scrap should be adjusted against the cost of the product. Therefore, my cost of production is 1 lakh. Less scrap, 10,000. Balance how much? 90,000, sir. That is your cost of production. If so, 10% thereon, 9,000, sir. So the total value 99,000 is the valuation as per number 30 in the hands of the manufacturer. It may be manufacturer, it may be service provider, it may be trader, industrial profit immaterial, actual profit immaterial. Add 10% only as your profit margin. Suppose if you say, sir, why should I refer the cost of production, sir? No, I am not interested to refer the cost of production, and cost of production difficult for me, sir, to catch hold, difficult to arrive the value, sir. In the absence of adequate information to arrive value on rule number 30, then refer 31. Who says? Rule number 27 clause D says. Rule number 31 says what? Rule number 31 is nothing but best judgment assessment, namely the department will arrive the value by using their best of knowledge and demanding the taxpayer to pay the tax on such value. Rule number 31. That means rule number 27, clause A, open market value. If not, rule number 27, clause B, the or being a sum total of consideration equal to money value. Rule number 27, clause C, like kind in quality. If not, come to rule number 27D, refer the rule number 30. If not, rule number 31. In that order, arrive the value. Finally, we are arriving where? Rule number 31, where it is ultimate, department will decide the valuation for your given case and will demand you to pay the tax. Now, I would like to invite you the attention on the part of the what we can call the rule number 31, how to arrive the value in the case of rule number 31. Dear friends, there was a landmark judgment of the Supreme Court of India in the given case of Fiat India Private Limited. In the case of Fiat India Private, what happened? They are manufacturing their UNO model four-wheeler, and almost all the cost works out cost of production is of 3 lakh rupees, but they are deliberately selling below manufacturing cost, let us say at 2 lakh rupees. Manufacturing cost itself is 3 lakh rupees, but they are selling at 2 lakh rupees to capture the demand, to get the market. And such a practice they adopted for the past 5 years. Department officer came to know this particular activity of the Fiat India selling below manufacturing cost, then said, sir, under the GST law, we have rule number 31. Accordingly, I am arriving the value by appointing a cost accountant. We obtain the certificate from a cost accountant with regard to cost of production of yours, which is almost 3 lakh rupees, and adding 10% thereon, namely 30,000. So the valuation should be 3,30,000. So you have to pay the tax on 3,30,000, but not on 2 lakhs. Since you paid on 2 lakhs, now differential amount 2 lakhs to 3,30,000, 1,30,000 on differential amount you have to pay now the tax with the interest. Like that, the department demanded. The matter went to the almost High Court to Supreme Court. What is the argument of the Fiat India here is, since I adopted the selling price to sell below manufacturing cost for the past 5 years, that itself is open market value. Therefore, why should I refer rule number 31? I am not going to refer rule number 31. Department valuation we are not accepting. Then the Supreme Court of India asked the Fiat India Private Limited. Now, Fiat India, you tell, any prudent business person can able to survive and success by selling continuously below their manufacturing cost? Is possible to survive and success? Even non-profit organizations also require to have profit. You are aware of that? Non-profit organization need to have profit, otherwise how can they survive and success? Non-profit making organization, as we understood, section 8 of the Companies Act 2013 is not to distribute their profit as a dividend to the members. Is the meaning of that. Does not mean that should not have the profit. How can get the profit without having selling price more than the cost of production? So, in your case, you deliberately, wantedly reduce the price to capture the market. Once you capture the market, definitely you are going to be show your real price. Otherwise, you can't survive with success. Therefore, what the price you adopted is penetration. You aware of that. Penetrating price means coming in the market with a lower price once the customers are affectionate with that and showing the real price. This is what the practice you adopted. Deliberately you reduce the price. Therefore, that price cannot be a sole consideration. Even though we adopted that price for the past 5 years, we won't mind. That is not a sole consideration. Department arrive the value as per rule number 31 is perfectly correct. You bound to pay the GST on cost plus 10%, which is equal to value of supply on which you have to pay the GST. But the matter of this Fiat India Private Limited belongs to the Center Excise Law, also hold good under GST law. When I want to refer the rule number 31, this landmark judgment of the Supreme Court is hold good. Now what happened, my dear friends? From this judgment, what we understand, under the GST law, value of supply cannot be below manufacturing cost. Value of supply always cost plus profit, which is a positive profit. Do not invite the concept of income tax. So profit includes loss, sir, in income tax. Therefore, under GST law from the Fiat India Private Limited, we derive the concept what? The transaction value, sale value, supply of services value should be cost plus profit, which is a positive profit. What rate profit? 10% as per rule number 30, which is whole good to invite, and rule number 31 by department. So department taken the help of rule number 30 to arrive the value. Very good. After this judgment of this conceptual understanding, department officers started to write various taxpayers under GST law who are selling their product or services below manufacturing cost, saying that, look, Fiat India Private Limited, what they said, the cost plus profit, your cost is 100 rupees, you are selling at rupees 80,000. Sorry, we take cost 100 rupees as cost of production, as cost of supply, on which 10%, 10 rupees, 110 rupees is the valuation. Industry got shaken. What is this? A case where genuinely, if I do so, also you wanted to be invite Fiat India Private Limited case to penalize me. I will tell you what genuine case we're talking here, Mr. Sir, I'm a basically manufacturer of, let us say, laptops. My cost of production for laptop almost rupees 20,000, sir. I'm expecting a profit of, let us say, 10,000 rupees, sir. I'm willing to sell at rupees 30,000, sir. After completion of the production, about to sell, about to go for market, about to go for sale, about to get the buyer. Then I came to know that my competitor who imported similar configuration of laptops at rupees 15,000 and having a profit margin of 2,000, my competitor selling at 17,000, sir. Oh, my competitor selling at 17,000, similar configuration. If my cost is set here India 20,000, how can I sell at 30,000? My competitor is at 17,000, similar configuration. That to import the product. If I am not going to sell now, if I retain the goods in my godown, after 1 year, 2 years, this product, this configuration, this software will obsolescence and no one will buy this product. So I forcefully, deliberately, under the pressure, I am going to sell below manufacturing cost of mine because I want to meet my competitor competition. So I am releasing my product at rupees 16,990. 16,990. My competitor selling at what price? 17,000. I am selling at 10 rupees below the end of my competitor to get the market because I have competition. At what price I am selling? 16,990. What is my cost of production? 20,000. My profit, nothing. I am bound to sell. I have no other option. My intention not to sell deliberately below manufacturing cost. In such situation, department send the notice, hey, Mr. Manufacturer of laptop, as per the Fiat India Private Limited, what is the case? Cost of production of yours, we came to know rupees 20,000 rupees per product and plus 10% thereon, namely 2,000. Your total value of supply 22,000 per laptop, on which you have to pay GST. Department send the notice. Already I am crying because of selling below manufacturing cost. I hurt and selling. Already I am crying here. One more here burden on me to pay the GST on 22,000 rupees for nothing. Such a genuine cases, the department should not issue show cause notice. In the genuine cases, the price at which the supplier supplied 16,990 below manufacturing cost itself is an open market value. Hey, Mr. Department Officer, you have no right to ride the place of the taxpayer set by CBIC. And moreover, if you wanted to use Fiat India Private Limited concept to apply and send the notice, that can be do so by the commissioner or principal commissioner range officers, not below than the commissioner or principal commissioner officers. Only a commissioner level officer and the central tax, state tax only can be invited. He is the person to send the notice. In the given, he is the person to authorize below the rank of his position to send the notice. The commissioner and above level officers only can be send the notice in the case where if the Fiat India Private Limited case want to invoke to arrive the value. So, as you are aware of that, in our case also investments, valuation, cost price or market price, whichever is less generally. If the market price is fallen down below than the cost, then should not be compared. The price should be considered as such. So, similar to that, here also my dear friends, if the price is below manufacturing cost, which is genuine fall down, then that itself is open market value. Circular of the CBS is available here to department officers and industry. So, as a result, I can say that, my dear friends, in the given case, rule number 27 to rule number 27A to rule number 27D, read with rule number 30, 31 is here for our what we can call as a helping tool to derive the value and the valuations. Here, I would like to bring to a notice how to arrive the value as per rule number 30. There are questions in the examination, RTP, past exam RTP question is there. I will refer now. Under rule number 30, how to arrive the valuation is as follows. By inviting our workbook, I am bringing to a notice. This is RTP problem, sir. Reading as follows. Alpha Limited, a manufacturer of taxable goods, assuming that there is no opening and closing inventory, compute its value as per rule number 30 of the CGST rules for the purpose of GST from the following information provided by Alpha Limited. Particulars: cost of direct material inclusive of GST, namely IGST 28%, which is 25,600. Cost of direct salaries including HRA, house rent allowance, 12,000. Total is rupees 30,000. consumable stores and repairs 8400, depreciation of the machinery 500, quality control cost 4300, research and development cost 2700, administrative cost production related 2000, project management related 1800, interest and financial charges 2400, cost incurred due to the breakdown of machinery 1300, amortized cost of molds and tools received free of cost from the recipient of the goods 600, selling and distribution cost 4600, scrap value realized 1500. Note, ITC of IGST so paid is available, meaning thereby any GST or any tax paid with the intention to recover in future period of time which is not form part of the cost. Sir, in that case, GST paid on inward supply qualify for ITC, then should not be form part of the cost of purchases. How to pass the journal entry in the given case, sir, in the books of the recipient of the goods who want to avail the input tax credit on such inward supply? Simple. First, let us see what is the value here. 25,600 multiplied by 100 divided by 100 plus GST. We will get exclusive of GST. How much? 20,000. Huh?
Yes.
20,000. Then, in that case, 25,600 multiplied by 18% GST. Sorry. Here this is 28% of my dear friend. It is not a 18%. Sorry, extremely sorry. 28% because 20% GST, not 18%. Tell me how much? Okay. Great. Because I have been incorrectly mentioned 18%. What is there? 28% GST only I have to consider. So in the given case, 28% GST paid and purchased. Therefore, you rightly said the valuation exclusive of GST 20,000 and the GST here 28%. Na? 28% divided by 128%. I will get GST amount. How much comes? 5,600. Is clear, my dear friends? Now, I have to have a journal entry in my books. Alpha Limited, passing journal entry. Purchase account debit, 20,000. Input tax credit receivable account debit, 5,600. To bank, 25,600 is the entry. That means the cost of purchase 20,000 rupees goes to profit and loss account. 5,600 goes to my current assets balance sheet as current assets, not a non-current assets. Is a current assets. 5,600 under the asset. Now, in that case, under the cost of production, I have considered only rupees 20,000, not the 25,600. Suppose if the problem specifically says that Alpha Limited paid the GST on inward supply 28%, which is not eligible for input tax credit. If that is the case, what is not eligible for input tax credit will form part of the cost of purchase without any doubt. Simple. Inward supply GST paid. Is it qualify for ITC? Yes, sir. Then not form part of the cost. If it is not qualified for ITC, then it is form part of the what we can call it cost of purchase. If it is a qualified for ITC, then it is not form part of the cost. If not qualified for ITC, it is form part of the cost. A simple concept. Now come back. Further here, my dear friends. Direct salary include HRA. HRA is what? Salary includes basic, HRA, DA and all will come. So direct salaries means direct wages well eligible to form part of the value of supply. Therefore here the cost of production, this 20,000 plus this rupees 30,000 should add. Further, consumable stores repairs also addable in the value of supply, namely cost of production. Depreciation of the machine absolutely addable. QC, quality control cost, also be addable. Then R&D, without which difficult to carry the product. Therefore, the given R&D is for the given product only. Therefore, addable 2,700. Administrative cost only, product related only should be considered, not the office oriented. This should not be considered. Thereafter, interest, financial charges should not be considered. Cost incurred due to breakdown, abnormal expenditure should not be considered as per cost accounting standard number 4, which is very relevant here to arrive the value under rule number 30, cost of production. The helping tool is our cost accounting standard 4. Further, amortization cost of mold and tools received free of cost from recipient. Of course, it is look like section 15, subsection 2, class B, namely supply good made by the recipient freely to supplier. Such goods is there here is as addable in the value of supply, namely cost of production. Selling and distribution should not be added because it is going to bring to us cost of sale, which is not required for us. Scrap value should be considered as a deduction from the total cost of production. Thereby I got how much value here? Total value how much? Quickly, fast. Huh? 67,000. On which, don't forget, as per rule number 30, to arrive the value, 10% is 6,700. Therefore, 73,700 is our valuation as per rule number 30. 73,700 is the value, namely transaction value in the given case. So is the way in which you can arrive the value of supply in case of rule number 30. Now please come back. Any further more doubt now you have to tell me under rule number 27. Any further more doubts? Fine. Further, referring to rule number 28 now. Rule number 28. We have amended provision also here. Very good amended provision. One can expect in the examination of May 24 onwards. Rule number 28, which talks about supply between distinct persons. As you are aware of that, head office, branch office having multiple registrations. Related parties, related person. Who are the related person? You are aware of that. As per section 15, explanation to section 15, where the directors of the company, employer, employee, partners of the partnership firm, family members, or the same family members as defined section 2, section 49, namely called spouse and their children's. Further, parents, grandparents, brothers, sisters who are wholly, mainly dependent on such person, or one company holding not less than 25% of the equity share of the other company, controlling directly, indirectly, by way of not less than 25% voting right held by the one company, other company. Like that, we have understood already. Explanation to section 15, which talks about related persons. Where we refer these points, under schedule 1, point number 2, supply of goods between related persons or distinct persons in the course or furtherance of business. There we refer, but it does not include gift given by an employer to an employee in a financial year does not exceed dash amount of rupees. Tell me how much? Does not exceed rupees 50,000, which is not a supply. We refer these points. Now please come back. So I refer to you distinct persons. I refer to you the related person concept here. Referring to you now, rule number 28. This valuation helping tool to us in the case where supply between distinct and related persons. If so, here also Similar approach has been adopted like rule number 27A, open market value. Here also rule number 28A, open market value. If that is there, go ahead. If that open market value not there, don't worry. Rule number 28B says that go to like kind quality, but not sum total of consideration, because there is no consideration. Na? In the given case, there is no consideration because head office supply the goods to branch office will make the payment to head office or what? No. In that case, they have not invited the rule number 27B. Sum total of consideration equal to money value, that concept not inverted here. Rightly they said in the rule number 28B, like kind in quality. If there is available, same concept what you understand rule number 27B, rule number 27C, like kind in quality. Similar concept here also. Rule number 28B, like kind in quality. Good. If that is also be not available or not in a position to consider that, then rule number 28C, which says that refer the rule number 30. Same, cost plus profit. Otherwise, it goes to rule number 31 in that order, namely best judgment department will decide default provision. What to understand rule number 30, 31 just now in the rule number 27 class, what we called D case, same here also whole good. Apart from that, here something extra is given. What is given? It means first proviso, very very important proviso it is. What is this proviso says? Where the goods supplied as such at the option of the supplier, value shall be 90% of the price charged by recipient. What do you mean this? I will tell you here with one example. Dear friends, there is a head office, let us say Mrs. ABC and Company, registered person, located in Chennai. Of course, we too have one more office, let us say in the given case here ABC and Company, registered person Chennai. Further, ABC registered person in Hyderabad, let us say in Hyderabad, is a head office, is a branch office. When here they supplied goods, let us say for example supplied goods, let us say on 1st January 2024 supply, as 1st April, assume not January, 1st April 2024 supply. The worth of the goods, worth, how much worth? Let us say 2 lakh. 2 lakh worth of the goods supplied on 1st April. They are the distinct persons, undoubtedly. Now, this ABC being a registered person, here they sells the given product. They sells the given product to their customers who are non-related parties. Let they say they sold to Mr. X, who is a buyer. At what price they sold? As such, what they have supplied, let us say what they supplied here is, let us say watches supplied, same watches sold. Watches, that means what? Supplied as such, to bring the concept. That means ABC branch office Hyderabad should not convert into different point and sell. The sells as such. In that case, at what price they sold? So they sold for rupees almost 2,10,000. Sold watches for rupees 2,10,000. To whom? To a buyer, non parties. When they supplied, sir, about to the time only. That means when they supplied the goods here is 1st of April 2024. That means they might have been sold these goods. This type of goods they are selling. Actual sale may record, may not be required. Selling also about the time only. Let us say on 28th March 2024, selling these goods, which is price around 2,10,000, or they may be sold also, as the case may be, or there may be selling price in the branch to sell to the customer is the price. In that case, who is the supplier of these goods? For these goods, supplier is ABC head office Chennai. They are liable for GST. What is the valuation? A transaction between distinct person. Now here, this branch office not paid anything to them. No consideration. Not paid means no consideration. Not paid means no consideration. No consideration. That is what I wanted to write here. No consideration is the meaning of it. Here, this supply, no consideration. Even though there is no consideration, it is called as supply. Namely, deemed supply. Why deemed supply? They are covered under Schedule 1. Point number 2. That's right. Now the point here is, for a deemed supply ABC Limited Chennai, what's the value? In the given case, the law of the land says that valuation, rule number 28. You can go open market value or the like and quality, rule number 30 or 31. Otherwise, at the option of the supplier, ABC company Chennai supplier, here it is option. Want to take first proviso to rule number 28? Yes, which is here says that 90% of the price at which the recipient supplied as such to their customers. At what price? 2,10,000. So 2,10,000. 90% of 2,10,000 is equal to how much, my dear? Quickly. Two lakh 10,000 into 90%. 1,89,000. 1,89,000. Here, this is the valuation in the hands of ABC Limited, ABC and Company, Chennai, supply. If the goods supplied as such, where ABC and Company, Chennai, not passing input tax credit to ABC Company Hyderabad, because there is no invoice in the given supply. As a result, the ABC and Company is Chennai not passing any credit to ABC Company Hyderabad. At the option of the supplier, 90% of the price at which the recipient supplied as such will be considered. That means the worth of the goods open market value 2 lakhs. But 90% of the price at which the recipient supplied the goods is 1,89,000. So which is economical for ABC Company Chennai? 1,89,000 rupees. if that is the valuation, the output of tax will be lesser. Can go ahead. That time input tax credit not available to ABC and Company Hyderabad. Suppose ABC Company Hyderabad says I want input tax credit. Then there is second proviso. There is second proviso in the rule number 28, which says that second proviso of rule number 28 says that where the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value of the goods or services. Meaning thereby, in the given case, if they wanted to pass the input tax credit, then this ABC Chennai wala should issue what? A invoice. A invoice. A invoice should be issued. In the given case, they should issue the invoice. Issued invoice, because tax invoice. What value they mentioned? The value mentioned here is 2 lakh rupees, sir. Then in that case, is a fair market value, sir. Fine, sir. Then GST, let us say IGST. Let us say in the given case 18% IGST, which is 36,000 rupees. So 2 lakh 36,000. What is the value? The value shown in the invoice itself is the value. In the case where the second proviso to 28 wanted to opt by supplier, where he want to pass the credit to the recipient, is the approach. With this, rule number 28 generally expression completed. But now we have here under rule number 28 amended provision. An excellent provision it is. In the case where if there is corporate guarantee, the concept here is corporate guarantee comes into picture. In that case, valuation should be as per the new provision, namely rule number 28 sub rule number 2. Sub rule number 2 is a new sub rule under rule number 28. So far under rule number 28 only one rule is there, sub rule. Rule number 28 sub rule number 1 only was there and is also there, with which carries proviso 1, proviso 2. Now rule number 28 sub number 2 newly inserted to have the valuation in the case of corporate guarantee from 26th October 2023 is an amended provision. Definitely one can expect in the coming exam of May 2024 onwards. Dear friends, what is this corporate guarantee? Corporate companies want to obtain the loan from the banks, especially huge amount of loan. Banker will give the loan with the guarantee. Who is the guarantor? Sir, my holding company is a guarantor, sir. My holding company is a very good rating company, sir. That company shares are trading in the stock exchange, sir. NSE, BSE, sir. Sir, they also be recently trading in the international trade centers, sir. Very good demandable shares they have, sir. Excellent profits, sir. High net worth companies are my holding company. I am the subsidiary company, sir. When I ask the loan to you, when I ask the loan from the bank, 200 crores, banker asking the guarantee. My holding company coming forward, don't worry, he is my subsidiary company, you pay. If he is not going to pay, I will pay to you. I am the guarantor. Such a corporate guarantee comes into picture. There is guarantee can be provided by corporate companies to their head companies generally, or otherwise a director of a company also will provide corporate guarantee in his personal capacity. When the director comes forward providing corporate guarantee to that particular company where he has directorship, whether attract the GST first of all. Dear friends, understand. Yes, a particular individual director in his personal capacity provide corporate guarantee to the corporate where he has directorship as per the RBI guidelines. The individual director who provided corporate guarantee on his personal capacity should not charge any consideration. Violation of the provision. You should not charge the consideration as per the RBI guidelines, RBI norms, RBI circular. Corporate companies where corporate guarantee given by personal capacity basis by director of the company, that should not be have any payment flow. Resultantly, since there is no consideration and consideration is not to provide restricted as per the statutory provision, resultantly such guarantees provided by personal capacity basis a director to the corporate company not going to tax at all because there is no consideration, and consideration should not be paid. If pay, it is a violation of the provision. Suppose if the director who is an ex-director, how possible? Being an ex-director of the company who coming forward to give corporate guarantee because he is a gentle person and also a Padma Shri, Padma Bhushan, for example, but he is an ex-director of the company, still has love and affection on the company. Company approach him, sir, please help us. We want to get the corporate loan, sir. Give the guarantee, sir. Yes, I will give the guarantee because my company where I was working as a director, genuine company. So such type of cases, who is not a director of the company, or he is ex-director of the company who provide the corporate guarantee on his personal capacity basis, that will attract, that will be provide consideration, allowed to have consideration, where the company is going to pay consideration to that particular ex-director. In that case, it is taxable. If so, how to arrive the valuation to pay the GST? Now coming to corporate companies providing corporate guarantee to their parent companies or related companies. In that case, there is a consideration allowed. In that case, how to arrive the value to pay the GST? Here, straight away I am bringing you notice, nutshell, the valuation is as follows. It should be asked this basis. Should not go rule number 28, sub number 1. It is overriding provision. Section, the rule number 28, sub number 2, when apply, when there is corporate guarantee. If the corporate guarantee comes into picture to arrive the value, you bound to follow rule number 28, sub number 2 only. No other valuation applicable here. What is the particular valuation? Here they said 1% of the amount of such guarantee offered or the actual concession paid to that particular corporate company or to ex-director who given the particular corporate guarantee. Among the two, whichever is here, 1% of the amount of such guarantee or actual consideration, whichever is higher. Now, my dear friends, in the given case, if that is the case, in the given case, assume a scenario. Corporate guarantee is, the amount of guarantee is rupees 200 crore. For doing so, the consideration given to corporate company or director of the company who is namely ex-director, not the director of the company, ex-director, personal capacity. In that case, the consideration is given, let us say, rupees 1 crore 20 lakhs, 1.2 crore. Now 1% of 200 crores is equal to how much? Rupees 2 crore, my dear. 1% of 200 crore is equal to 2 crore, or actual consideration 1 crore 20 lakhs. Among the two, whichever is higher, which is higher, 2 crores is the valuation, value of supply as per rule number 28, sub number 2, in the hands of the supplier of that particular corporate guarantee services. Here, parent company providing such a corporate guarantee to their subsidiary company in the hands of the parent company. This is what go to tax. Or ex-director of a company who is independent capacity providing corporate guarantee and drawing 1 crore 20 lakhs consideration. In that case, in the hands of the supplier, ex-director, not a reverse charge, forward charge, in the hands of a supplier, what is the forward charge valuation means? In the hands of ex-director, it is 1.2 crores actual consideration, or 1% of the guarantee amount, which is 2 crores. Amount whichever is higher is the valuation, namely 2 crores, on which who liable to pay GST? Ex-director, which is not a reverse charge, forward charge. Reason, he is not a director. Director of a company provides the services to the company not in the course of employment, which is reverse charge. Section 9.3 apply. Here 9.1 will apply. Means what? Forward charge. Now please come back. With this amend provision, loop and corner I have referred for your kind consideration. The points here available for your kind concern to read and understand. Example 1, example 2, these points only I referred so far to you. Further, referring to you now, rule number 29. Rule number 29 is a valuation in the case where there is a supply between principal and agent, which is covered under the clutches of the schedule 1.3, where supply of goods by the principal to his agent, where the agent undertaken to supply the goods on behalf of the principal, or otherwise supply the goods by the agent to his principal, where the agent undertaken to receive the goods on behalf of the supplier. In such cases, when it falls under schedule 1.3 cases, there is a flow of supply of goods from principal to the agent. If from principal to agent, if the goods has been supplied, from the principal to the agent, if the goods has been supplied, where the agent not going to pay the payment to principal, how to arrive the value in the hands of the principal? Here says that open market value, rule number 29, class A, open market value, or that open market value itself you compare with a value. What is the value? At the option of the supplier, be 90% of the price charged for the supply of the goods by the recipient to his customer. That means what we understand, rule number 28, first proviso. I explained, the head office, Chennai, supply the goods to branch office of Hyderabad, where the branch office of Hyderabad selling as such, where it is 2,10,000, on which 90%, 1,89,000. Like that we understood. No, that concept apply here. This provision. How to understand this? Rule number 29. I will refer with an excellent numeric example in this regard. Rule number 29 from our workbook. Yes. This question, my dear sir, very good one. One can have the bright understanding of the provision. Mrs. P Limited, being a principal, supplies laptop to his agent, and the agent is supplying laptops of like kind and quality in subsequent supplies. P Limited incorporated in Chennai, Tamil Nadu. Agent is located in Nagarkoil, Tamil Nadu. Goods supplied on 15th November by the principal to his agent. Selling price on 15th November, number of units supplied 1000. Price at which the principal supplies to agent is nil because it is a transaction between the principal and agent. Price at which the agent supplies to his customer at customer not being related party for rupees 22,000 on 15th November. Rate of GST ad valorem 18%. Goods procured by the agent from other independent supplier supplying laptops of like kind and quality at rupees 20,000 per unit on 15th November. On 15th November. So further, find the value of taxable supply of goods and GST liability in the hands of Mr. and Mrs. P Limited, namely Principal Chennai. Is a principal agent. Rule number 29. A. Open market value. Open market value. How much? This agent buys such goods. What type of goods? Supplied by principal to agent. Similar goods, agent will buy from somebody else. That means what? Open market value is available. What is the price at which this is to buy 20,000 rupees? So open market value here is 20,000. Or otherwise, that value will be value in the hands of principal when supply the goods to agent. Same value can be considered open market value. Or at the option of the principal, he can consider 90% of value at which the agent, after receive the goods from principal, supply to his buyers who are non parties. What is the price? 22,000 rupees, which is equal to how much? 22, 90% is equal to 19,800. So opting 19,800 valuation is economical because on which you are going to pay GST lesser amount rather to pay GST on 20,000. Therefore, the rate of GST applicable here 18%. 18% on what value? On 19,800. What is this 18% they are telling here? GST at ad valorem rate. What do you mean by ad valorem rate? Rate of tax is applied at the value of the goods. On the value of the goods. What is the value of the goods we have arrived? 19,800 rupees. On that value, apply the percentage of GST, which is called as technically ad valorem rate of tax. Therefore, 18% GST on this value, how much comes here? Almost all it is equal to rupees 3,564. GST. Here IGST comes into picture, which is 3,564 is the value of GST. 3,564 is the way in which you can adapt. Or otherwise, you can have it, come back and have it. If the open market will not available, sir, in that case, sir, this 90% also not a whole good, sir, for me. In that case, come here. Rule number 29. B says that refer the rule number 30 valuation where cost plus profit 10% irrespective of the actual profit margin, or if rule number 30 is not adequate information providing to you to arrive the value, then go to rule number 31 where the department will decide by default valuation. Accordingly, you have to be paid the GST. If you have any objection, go for appeal by payment of GST, which is known as payment of tax under protest. If the taxpayer paying the tax under protest, that means he is informing department, I am paying the tax against which I am going for appeal, is the meaning of it. But anyhow, now please come back. Here we understood rule number 29 concept, transaction between the principal and agent. Further, my dear friends, rule number 30 already covered to you by saying that cost plus profit, 10% profit. Rule number 31, highlighted by inviting to you the practical manner, the case study here, namely Fiat India Private Limited, which is none other than case analysis. This is what expectation of the institute at your level of CA final, CMA final. They very clearly said in syllabus, we are going to ask our students at final level comprehensive case study oriented questions from value of supply, place of supply, time of supply. Now further moving on to rule number 31 capital A. Rule number 31 capital A. What is rule number 31 capital A? Says that a transaction with regard to lottery, how to add the value? Lottery is nothing but form part of the specified actionable claim, as a whole actionable claim, which is in the definition of section 2 subsection 52. Goods includes actionable claims, which is lottery, betting, gambling. Now added furthermore from 1st October 2023 onwards, casino, gambling. Further they added here what we can call the online money gaming, horse racing. There are totally 6 points. There are totally 6 points, which is called as specified actionable claims as defined under section 2 subsection 102, where 6 points are there. Section 2 subsection 102, very clearly we have understood 6 points. 1, gambling, lottery, betting, horse racing. These are the 4 already there under the actionable claims. Now added under specific actionable claims. 1 more point, casino. 1 more point, online gaming. So there are 6 points are there. 1 is lottery, betting, gambling, horse racing. Now newly added from 1st October 2023, 1. Speak out please. 1. Casino. Last point. So at least speak out please. Online money gaming. 6 points. So the 6 points are actionable claim supply of goods, which is excluded from the schedule 3. Schedule 3 what? Supply excludes. Under that exceptions, specified actionable claims also got amended from 1st October 2023, the schedule 3 point number 6. Now I am taking only first point here, lottery. Supply of goods. Who supplied? State government, local authority. To whom? To the commission agents. Who are the recipient? Therefore, who liable to pay GST here in the case of lottery? As per our RCM section 9 supplement 3, the recipient lottery agent were liable to pay GST under RCM. How to arrive the value for the payment of GST? Here valuation should be as per rule number 31A only, not on the commission to pay GST. Valuation is face value of lottery ticket, which is MRP basis. Eliminate the GST, which is 28%. 100 divided by 128, multiply face value, MRP value, you will get one value. That you compare with the price notified by the state government in the official gazette for the given lottery, inclusive of GST. So that price multiplied by 100 by 128, you will get the notified price exclusive of GST. Among the two values, whichever is higher is the valuation in the hands of the commission agent, who is the recipient to pay the GST. Further, my dear friends, once you have the value on which you pay the GST. Sir, can we have a numeric example on it? Yes, I have numeric example on it from our workbook, which is an RTP question, long back was appeared. Your faculty catch hold and revise that with the latest provision. So now I am bringing the notice. Lottery. A question that gives, when you refer the provision and corresponding numeric application thereon, then you stronghold the provision with you. Even after you qualify, you won't forget. This is what my impression from the day one of my lectures. So with that intention, I am bringing this problem to notice is as follows. Martin Private Limited is a distributor or selling agent of lottery tickets authorized by the state of Kerala, who is liable to pay GST and also find the GST liability from the following. There are two lottery tickets are there, two different category. One is called a online lottery ticket, other one is offline, means printing the ticket and selling physically. Mahalakshmi is a printed lottery ticket, Bhagyalakshmi online lottery tickets. Very good. Number of tickets proposed is given, face values are given, guarantee price payout is given, number of tickets sold is given, price notified by the state of Kerala is given. Very good. Here, when we refer the face value, this 10 rupees in the case of Mahalakshmi, 10 rupees in the case of Mahalakshmi, which is MRP price, face value of lottery ticket. When you read the lottery ticket, MRP will be there. Is 10 rupees per ticket, which includes of GST, which is general inclusive of GST. Then you have to apply here. On number of tickets, what? Here proposed, sold, actual sale material. Generally, what we are referring, section 7, subsection 1, supply. Supply is enough. Actual sale not relevant. Actual sale is not relevant. Supply, under that, one of the element is a sale. Now, what is the lottery ticket number of tickets supplied by state of Kerala to the marty, namely recipient? 2,50,000. So on 2,50,000, 10 rupees per ticket, which will provide to you almost all 25 lakh. Is it clear? This 25 lakhs inclusive of GST. Therefore, 25 lakh multiplied by 100 divided by 128. You will get value exclusive of GST. How much comes here? 25 lakhs into 100 divided by 128. You will get almost all 19 lakh 53,125, my dear. 19 lakh 53,125 is the value. This value keep in your hand for Mahalakshmi. Then coming to price notified, 8 rupees per ticket. They said exclusive of tax. Notified itself exclusive of tax. The problem says exclusive of tax. I should not again eliminate the GST. So exclusive of tax. 8 rupees multiplied by number of tickets proposed, namely 2,50,000, because it is a offline tickets. Ticket printed and hand over to the commission agent by the state of Kerala. Now 8 rupees multiplied by 2,50,000. 8 rupees multiplied by 2,50,000 is equal to how much? 20 lakhs. So or rupees 20 lakh. 8 rupees multiplied by 2.5 lakh tickets. 8 rupees multiplied by 2.5 lakhs tickets. Among the two, whichever is higher, which is higher? Rupees 20,000 is higher. If that is the case, in the case of Mahalakshmi, value of supply is 20 lakh. Now GST, 14% CGST, 14% HGST, because they are both in the same state, intrastate supply. In that case, On 20 lakhs, 14%, 2,80,000 CGST, 2,80,000 SGST. Who liable to pay? Martin Private liable to pay under RCM Section 9, Section 3 of the CGST Act. Lottery is separate. Online money gaming different again. Horse racing is different. Specified actionable claims, which you are aware of that, no? Specified actionable claims. Yes or no? Huh?
Sir, but only 2 lakh tickets are sold, right?
Yes.
So then the balance should be 16 lakh, right?
Why? Who said like that?
Sir, because the remaining tickets are not yet sold, so
Head office. Head office, selling the branch office. They are the distinct persons. Head office supply the goods, 1000 units, to branch office. Branch office sells only 800 units only. Now, valuation for whom? For branch office or head office? You tell me.
head office.
Head office. What they supplied? Number of units. That only the value that will be multiplied by the value, but not the actual sold by branch office. When you come to branch office is going to be supply how much? 800 units supplied. We sold. That only valuation for the branch office. When the branch office liable to pay GST. That's the clarity.
Understood, sir.
There you are. Come back. Ask the doubts. Such a manner that put me in the corner. I should say that, sir, I will tell you, sir, after reading the provision, I will come back to you, sir. From the day one of my lectures of GST, I am telling my beloved friends, best brains of India, ask the doubt such a matter that I should say, I will come back to you tomorrow, sir, after referring the provision. In the given case, my dear friends, because that time only that interaction comes into picture, subject knowledge will be below to the level of the expectation of the institute. Institute will provide you glorious marks. If you passing the exam of CA final, 80 marks, 80 plus marks, and come to the industry, what a respect to you the industry provide, you are expert in the GST, 80 marks you got, you are selected. Please, sir, you will be head of our indirect tax department. Like that, industry will provide. Or otherwise, you can have independent practice. CS rocking life is like anything. If you refer any industry, my dear, your seniors are sitting as a CA. You take even stock broking many CS, Ministry of Finance, Employment, there are CS, members of the House of the Parliament, there are CS. So the knowledge of the subject knowledge of CA gives a complete gentleman. The structure of the CA gives you as a gentleman where the industry prize you as you are the god for them. So when that is possible, just as simply passing the exam, exact 200 marks, at least any one or two subjects you should be expertise. I am not telling you you have to get a rank and pass. Sorry, passing the exam itself is a great. At the same time, one or two subject thumb impression, especially indirect tax laws. GST direct taxes, Pitamahas are there. Big people are there. Big giants are there. Experts, direct taxes. But indirect taxes, a new topic where the institute is giving 80 marks weightage for the GST. Almost all GST only it is. If you got 80 plus marks in the indirect tax out of 100, see, your entire life you can enjoy. You can go and take the classes to the department of GST. Yes. And one more post is there, director cost under GST department. When the postings, they used to offer the appointments, on a basis exam will be conducted. You are quite competent to write the examination. You are the only person eligible to write. You being a practice, or you being CA final qualified CA final qualified person, or CMA qualified person, final examination qualified, that degree is required. Then only you are eligible to write the director cost. Director cost examination, if you write, multiple choice question only days. If you qualify, you will be appointed as a director cost. What is your rank? Grade 1, group 1 rank officer you are. But to write the examination, qualification only 2. Either you qualified CA or you are a qualified CMA, sufficient. With that final degree, pass degree, you can apply. See, your life is going to be triggered like a star. You are not going to get much money like a practice in CA. Practice in CA will mint the money, but as an officer of the department grade 1, you have higher respectable salary. Start with 1.5 lakh, 2 lakh rupees salary. As a grade 1 officer you are, group 1 officer you are. But it again depends upon the postings. When the government offered examinations, then you are come to know that, please make use of it, that opportunity. Then we come into picture how it means only when you are attached with the subject with love and affection. It is our life. That's why I'm telling you, interact with the faculty, fight with the faculty to extract things in a greater manner. Fight means what? Not to scold the faculty, by motivating the faculty. Not with argument, by way of request. Not only Rafi sir classes, wherever you are. Now please come back. Specified actionable claim, section 2, subsection 1 or 2, capital A, where there are 6 points. Here, if you refer, especially this term lottery, it is under RCM. It is under RCM. Remaining all FCM. Horse racing. The person who conducts the horse racing is a totalizator, namely collecting the bet and amount giving to that particular person who was a winner of that particular bet and gaining some amount. In that case, totalizator, supplier liable to pay GST. Like online money gaming, who liable to pay GST? Online money gaming supplier only liable to pay GST, even though it is import of services. Online money gaming, you have to have a registration in India. You are aware of that. But anyhow, please come back. So what I'm going to say here is, in the case of lottery, liable to pay GST by recipient, here Martin Private Limited, on the supply taken place by the state government to Martin. For that supply made by state government, Martin, recipient, is liable to pay GST. Now come back. Coming to Bhagya Lakshmi. Here is a Bhagya Lakshmi, which is online lottery ticket. My dear friends, here you come careful. Online lottery ticket, number of tickets proposed 3 lakhs. It is proposed only, not handover. One not given to any person, state government not given to any person. Available number of tickets 3 lakhs. When the ticket will be supplied, the ticket will be supplied only when a person book the ticket through online. Here only be careful. It is not a half line, ticket printed and given. It is not so. Ticket not printed. If ticket is not printed, no supply. Understand? Ticket only when print, only when the buyer purchase through online. In that case, number of tickets sold is the base. If so, number of tickets, face value 500, 2,35,000 multiplied by 500 per ticket, face value, inclusive of GST, which is equal to how much? 2,35,000, 2,35,000 number of tickets supplied multiplied by 500 equal to, it comes almost all 117. What we can call here is 11 crores 75 lakhs, can I say? Yes, yes, 11 crore 75 lakhs I can say easily. 11 crore 75 lakhs it is. Multiply by this 100 divided by 108, which is equal to how much comes here? The valuation. Perfect. 9 crore 17 lakhs 96,875. That value or 308 rupees per ticket notified by the state government in the official gazette, exclusive of GST. This multiplied by 2,35,000 tickets. So here 380 multiplied by 2,35,000, which is equal to 8 crores 93 lakhs. Whichever is higher, which is higher here? High 9 crore 17 lakh 96,875 is the higher amount, on which CGST 14%, SGST 14%. 9 crore 17 lakhs 96,875 multiplied by 14%, which is equal to CGST here. Yes, 1 crore 28 lakhs 51,563. Round off nearest to 1 rupee, 50% above. Then same amount of SGST. 1 crore 28 lakhs 51,563 is the way in which you have to identify the value of supplies. And the same thing has been provided as a solution for your kind consideration. I have given the split up separately. Here finally I have added the values 20 lakhs plus 9 crore 17 lakhs 96,875. On the total amount I charge 14% GST, CGST, HST.
Actually, first thing we just compare the price. If we just compare 500 into
Okay. See, I am not going to bother about. My presentation should reach to all my below students. There are bright students like you. There is dull student like me, maybe sitting in the class. My presentation should reach to all my below students. The way of presentation, what you have in shortcut routes, you can have it. But shortcuts presentations in practice acceptable, in the exam point of view not recommendable. Reason very clearly says the law, the examiner on the front page of the question paper, working note should be form part of the answer. See, I present my presentation. You see, my presentation. This is a provision. After giving the provision, answer is a presentation. So for this provision, okay, 2 marks. This answers correct, 2 marks. 4 marks out of 4, you get 4 marks. There is a scoring race. I am very much cautious. I am addressing to the students, not to the professionals. You are a qualified CA, you can practice by having shortcuts. You can do whatever you like. But as an examiner, the student should be speak with the examiner as if he's sitting next to him. Answer. Student speaking with me. Sir, these are answers, sir. These are provisions, sir. These are answers, sir. Excellent. How can you speak? Through the paper only can speak. Answer sheet. Where the answer should contain full-fledged information. Clear? Come back. Further providing here, my dear sir. So, rule number 31, capital A, valuation with regard to lottery is concluded. Now, furthermore, in the same, we have betting, gambling also is there. So, one by one, I am referring furthermore. Is as follows. After this, referring further here. In case of betting, gambling, horse racing, betting, gambling, horse racing. No, I don't want any food now. I am in the class. Please do not disturb me. Now, please come back. Madam, see, comes and asks, tea vanuma, coffee vanuma, tiffin, because I am taking the class. If I say I am not taking the class, simply sitting, eating, தண்டக சோற பாரு எப்போ பார்த்தாலும் கேட்குறாரு சாப்பாடுன்னு அனு சொல்லுவாங்க கண்டிப்பா. Meaning what? I try to say, we as a human being should always work towards our achievements. Yes, yes. Then only we get the respect. Obviously, my dear sir, when there is holidays and all, I used to ask the early morning as a habitual manner tea. கொடுத்துடல என்ன இருக்கு கிளாஸ் இல்லைல்ல வெயிட் பண்ண. They will give 8 o'clock tea. Now in the class, 2 times, 3 times, our class, right? Something we provide. Genuinely happened like that only. See, even while studying CA final, first attempt failed. அப்பா என்ன பண்ணுவார் தெரியுமா? இதை பாரு, வேஸ்ட் ஃபெலோ, மார்னிங் 6 மணி ஆனால் எழுந்துக்க மாட்டாரு. திஸ் ஃபெலோ இஸ் எ லேசி ஃபெலோ. எக்ஸாம் போயிடுச்சு, எந்திக்க மாட்டாரு, எப்போ படிச்சு பாஸ் பண்ண வரும். Like that experience is to have. Once you qualified CA and sleeping up to 8 AM, அப்பா என்ன சொல்லுவார் தெரியுமா? பையன் வந்து ரொம்ப கஷ்டப்பட்டு லேட் நைட் தூங்கிட்டாரு, டிஸ்டர்ப் பண்ண வேணாம், அவர் தூங்கிட்டோம், எந்திக்கும் போது எந்திக்கிட்டோம். This is what they expect. You get my point? The same respect in the industry also. Sir, I'm a chief accountant. So what? Sorry, no value. Sir, I'm a chartered accountant. Great value. Difference you see. Chartered accountant, 0 experience. Chief accountant, 20 years of experience. Industry will appoint chartered accountant as a manager. Hey, chief accountant, you report to manager. Experience, respectable thing only, but education is too respectable. So what I'm trying to say here is, I know that you are so determined people not to quit any point of time. You came to final level, just door is waiting to open to become a qualified CA. Koncha kashtapada become a qualified CA. Now please come back. Referring to furthermore, my dear friends, here, betting, gambling, horse racing is considered. The valuation here, they said simple. The value of supply of actionable claim in the form of chance to win in betting, gambling, or horse racing. In a race club, shall be 100% of the face value of the bet or the amount paid into the totalizator. That means whatever the face value, sir, horse racing 1000 rupees sir, each bet. There are 10 people, each one 1000 rupees betting. One says so and so horse win, so and so horse win, like that. 10 people come forward, and I'm a totalizer. I'm conducting that horse racing. I collected how much? 10,000 rupees. 1000 into 10. So bet amount 10,000 is the value of supply. Who liable to GST? Totalizer liable to pay GST. Now coming to the amendment from 1st October 2023, there are two provisions has been added, two more points has been added under the actionable claims, and separate definition given specified actionable claims by stating that section 2 subsection 1 or 2 capital A, where there is casino and online money gaming, both are added. Casino and online money gaming. How to arrive the value of the casino, online money gaming? Here we have section 15 subsection 5, a new subsection under section under CGST, mean to say section 15.5 deals with casino valuation and online money gaming valuation from 1st October 2023 is the amended provision. The government on the recommendation of the GST Council notified the value of supply for the following rule. Rule number 31, rule number 31 capital B. New rule has been inserted. Up to earlier, before 1st October 2023, it was only rule number 21, rule number 31 capital A. Then go to rule number 32. But here, rule number 31A, after that, rule number 31 capital B, thereafter rule number 31 capital C. There are two rules has been added because there are two things are added now. In case of online money gaming, rule number 31 capital B, arrive the value. What is the value? How to arrive? Rule number 31 capital B says that value of supply in case of online money gaming, including online money gaming, valuation from 1st October 2023 onwards. Notwithstanding anything contained in this chapter, the value of supply of online gaming, including supply of actionable claims involved in online money gaming, shall be the total amount paid or payable or deposited with the supplier by way of money or money's worth, including virtual digital asset by or on behalf of the player, provided that any amount returned or refunded by the supplier of that particular online money gaming to the player for any reason whatsoever, including player not using the amount paid or deposited with the supplier for participating in any event, shall not be deductible from the value of supply of online money gaming. No returns will be allowed as a deductions, is the meaning of it. Don't worry, I will bring the numeric example here to answer. How to answer this? You take this particular thing. I sometimes before I refer this also, but again I am furthermore referring for your kind consideration. In the given case, only one example is there. Okay, fine. So this example I am bringing on this. Sometimes before I refer this, again I am referring to you. Say online money gaming. Online gaming as such not taxable, because online gaming, if there is online gaming, no flow of funds, no consideration, then no GST. So we have so many online gaming applications which we are playing, and my wife used to play every time that puzzle by opening a particular application app is also game, online game only, but not online money gaming. There's no money involved here. If money is not there, no consideration, no GST. You are aware of that. So money involved case only I'm talking here. Online money gaming, which involved the type of a skill required to play. Puzzle required skill, the spellings and filling the blanks and all. Are simple, scooting, more speed, up and down, slow up, and some any other hurdles comes, cross and go like that. That gaming is only a time passing gaming, fun game. In that case, as the case may be, as long as online money gaming where the payment is involved, the bet amount is rupees 100, and the person who continued online money gaming getting the platform fees, mean his consideration 10%, namely 10 rupees. Then what is the value of consideration? Entire bet amount. If the rate of GST 18%, it's 28%, sorry to say 18%, no 18%, no 18% at all. It may be game of chance, game of skill, as the case may be 28%, IGST only. IGST 28% on 100 rupees, 28 rupees only, not the 10 rupees to levy IGST. Same way, it is maybe game of a skill or game of chance, as the case may be. Here also 28% GST on the entire value of bet, liable to pay by supplier, namely the person who conducted online money gaming. Similar to that, casino. You are very much aware of that. Casino. Huh. Coming to the casino, for example, one particular example is here. Let us assume each player placed a bet worth rupees 100. As such, total bet amount be 400 because there are 4 players. Now the company concerned gets a platform fee at the rate of 10% on 400, namely 40 rupees is a consideration actually for a bet the casino conductor person. But here, what value will be considered means not 40 rupees in the hands of the casino or online money gaming wala. It is a bet amount rupees 400. On 400 rupees, liable to pay GST 28%. Now the furthermore points. Sir, what about amount or returned, sir? Returned amount, sir. What is amount returned? Sir, a person owns, sir. We paid to the person 350 rupees, sir. That means his bet is 100 rupees, but he won total 350. 100 rupees is prize money, his bet amount, 250 prize winning money. That winner of the prize, 350 rupees what he won, subsequently betting again in the same casino or whatever, maybe online money gaming. Reinvestment of the amount not going to attack the GST. Suppose he quit that game. After online money gaming, he is selected to play casino, where he costing 350 rupees bet amount, a fresh bet, which will attack GST. No, sir, he is a winner, sir, and entire 350 is carrying and going out, sir. Then, in that case, absolutely that 350 rupees what he won not going to attack GST. Sir, for the sake of encouragement to the players to stay with that, because if you refer, my dear sir, these online gaming people and casino and all, when physically you are playing, especially a closed circuit where once you entered inside, that operator wanted to retain you, not to direct your attention. There won't be any windows. Even if you see windows outside, then you get dilute your attention and quit from the place. To retain you, to make you addict of this particular play, that fellow, what he will know? Okay, sir, though you may be loser, we are giving you prize money to play further, some token amount. See, I invested 100 rupees, I lost 100 rupees, but subsequently the player, namely to play for that operator says you own 10%, 10 rupees. So I got 10 rupees back as a gift or bonus, whatever may be. That I am going to invest again. Sir, amount refund how much? 10 rupees. Such a refund amount cannot be deducted from the bet amount. That means I costed 100 rupees bet, I lose the money. I lost the money. To motivate me, the operator giving return 10 rupees refunding. Sorry, what refund you give or not give immaterial. That is not deductible from the bet amount. Entire bet amount attack GST, apply GST. Reinvestment of the bet amount, winning amount, not attack the GST. Winning amount only you are going to reinvest, not going to attack GST. Meaning thereby, if you got 10 rupees as a refund to you, and that 10 rupees you are going to be cost to play again, which is a fresh amount you are investing, because you are not winning amount it is. Now please come back. Rate of GST 20%. Total consideration equal to bet amount or the amount contributed for playing that particular match. But one thing, sir, this is not at all healthy practices to involve it. But unfortunate, in India nowadays, so much of advertisement on this online money gaming. You know, one particular episode is coming nowadays. Shark Tankers. Shark. Which one it is? Huh? Shark Tank India. See my son telling. 5th standard. Shark Tank India. Shark Tank India. A particular episode where very often advertisement poker baji. What is the poker baji? Gambling only. Which is nothing but online gaming only. It is like, you know, very bad habitual habit to play. But I personally strongly recommend it. Do not fall into that particular activities. For the sake of discussion to levy the taxation, there's a reason the government of India says 28% highest rate of GST on such type of activities. Now please come back. So we got rule number 31, capital B. Same way, rule number 31, capital C. Rule number 31, capital B, online money gaming valuation. Rule number 31, capital C, is casino valuation on the entire bet amount only. GST apply. Winning amount reinvested, not at GST. Any refund, no deduction from the GST. Rate of GST 20%. Who liable to pay GST? Supplier only liable to pay GST. Further effective my defense. With this, we understood and concluded rule number 31 capital A, 31 capital B, rule number 31 capital C, valuation. Now please come back. Rule number 32, where we have so many sub rules, almost 7 sub rules we have. Rule number 31, sub rule number 2, money changing services. Like the Western Union or the banker who has authorized by the Reserve Bank of India to exchange the foreign currency for the want of Indian currency, or vice versa. So in that cases, how we should arrive the value? The valuation in hands of the money exchanger is as per rule number 31, sub rule number 2. It may be class A or class B, left to the option. Class A, if you refer, where there are three situations has been involved. Actual exchange rate compared with the Reserve Bank of India exchange rate. Among the difference identify the difference multiplied with the number of foreign currency, you will get the value of taxable supply. Second case, RBI reference rate not available cases, actual exchange rate for the given particular foreign currency multiply with number of foreign currency and the total value apply 1% that gives you value of taxable output supply. When we talk about cross currency, money exchanger dealing with a customer, he has UK pounds, he wanted to exchange to US dollars in India. It means money exchanger providing for one foreign currency for the want of another foreign currency. But in India, there he should deal with only Reserve Bank of India. If so, US dollars required by the customer. Its RBI reference rate multiplied with the US dollars. Exchange rate of RBI reference rate for UK pounds. Number of UK pounds given by buyer for the want of US dollars. So number of UK pounds multiplied with the Reserve Bank of India RBI reference rate. Then you will get UK pound equal to Indian rupees, US dollars equal to Indian rupees. Among the two, whichever is less, that value you choose, on which you apply 1%. On which you apply 1%. That gives you value of taxable output supply. On that value of taxable output supply, you have to apply GST rates, which is 9% CGST, 9% HGST. In the case of IGST, 18%. Is one type of valuation, go ahead. No sir, I am not happy with this rule number 31 sub rule number 2 class A sir. Then come to rule number 31 sub rule number 2 class B, which says that in the following manner: up to 1 lakh rupee of value of actual exchange, 1%. Here no RBI reference rate, only actual exchange rate multiplied number of units of the foreign currency. Total value how much? Less than or equal to 1 lakh. If so, 1%. Such 1% of 1 lakh value or rupees 250, whichever is higher is required, because minimum here is 250. That's fine. Minimum is 250. That's fine. So 250 rupees or 1% of the 1 lakh, among to whichever is higher. If 1% of the actual exchange amount fallen below 250 rupees per transaction, and in that case valuation is rupees 250. That's why I said 1% of the 1 lakh rupee of actual exchange amount or rupees 250, whichever is higher. Now, if the actual amount of exchange is more than 1 lakh rupee but not exceeded 10 lakh rupees, that means up to 1 lakh 1%, which is 1000 rupees. After 1 lakh to the level of 10 lakhs, 9 lakhs gap. This 9 lakh on which 0.5%, namely 4500 maximum, plus already 1 lakh on which 1%, 1000 rupees. 5500 is the maximum amount if the exchange value is up to 10 lakhs. Over and above 10 lakhs without any upper limit, in that case, on that over and above 10 lakhs, 0.1% that value plus 5500, the total value, or rupees 60,000 per transaction. Among the two, whichever is less, that means maximum rupees 60,000. Suppose more than 10 lakhs without upper limit, 0.1%. The total value comes 75,000. In that case, 75,000 or rupees 60,000, whichever is less. So maximum amount per transaction under rule number 32 sub number 2 class B is 60,000. This and all have its own merit in the exam point of view, in the numerical application, or multiple choice questions, MCQs. There they were going to ask these points. Furthermore, presenting here, my dear friends, rule number 32, sub rule number 3. Services supplied by air travel agent, not operator. My name is Akbar Travel. I am one of the air travel agent, facilitating my customers to book the flight tickets of air travel operators. Thereby, I am getting the commission. On such commission, I want to pay GST, pay it. Or otherwise, you have the option to pay GST under the rule number 32, sub rule number 3, where on basic fare, domestic basic fare, 5% is equal to value of taxable supply, on which you pay GST. In the case of international air travel bookings, if so, 10% of basic fare of international booking is equal to value of taxable supply. Again, whether should I follow this approach or shall I follow the commission? Commission includes year-ending bonus. Year-ending bonus nothing but what? From the commission retained by the supplier and releasing at the end of the year as called year-ending bonus. It is a form part of the commission only. It is taxable supply only. So now here what I am trying to present here is the concept of tax planning. A air travel agent has tax planning in advance whether to go and pay GST by arriving the taxable supply in the particular given option, or I can go and adopt valuation as per the valuation rule number 32 sub number 3, where 10% of the international airfare is equal to value of taxable supply. In the case of a domestic booking, 5% is equal to value of taxable supply. These percentages are important to remember in the examination. That fellow won't provide in the examination. We have to revise number of times to understand. Like earlier I referred, no, rule number 32 sub number 2 class B, where the money exchanger opted this particular class B up to 1 lakh rupee of exchange 1%, 1 lakh to 10 lakh 0.5%, more than 10 lakhs without upper limit 0.1%, minimum value per transaction 250, maximum value per transaction rupees 60,000. Like that, you have to have a commendable way of recollecting the provision. Then only you can answer in the examination within 3 hours. For which revision only the two revision. Now please come back. Presenting here for current consideration the simplified what we can call here tax planning approach problem in the given case. Simple example. It is an exam of this particular RTP problem what I am referring in the institute materialities, referring from the our workbook. Air travel operators. Yes, is also a study material problem. In fact, study material of CA. Compute the GST liability of Mr. A, an air travel agent, for the quarter ended 31st December. Using the following details. Basic fare collected 50 lakhs. Basic fare collected for international booking 80 lakhs. Commission received from the airlines on sale of domestic and international tickets 4,50,000. Year-ending bonus received in that particular December is 50,000. Now I said to you commission, which is nothing but these two activities, equal to 5 lakh, on which 18% GST, which is rupees 90,000. That is one option. Or if you refer the basic fare credit 50 lakhs, which is nothing specified. One is called international booking, other one is left over, nothing but what? Fill the blank. domestic booking, which is considered as 5%, is equal to taxable supply. Here, equal to 10% international booking, taxable supply. 5%, how much comes here? 50 lakhs, 5%. Huh? 2,50,000. 10% of 80 lakhs. 8 lakhs. Now, total how much? 10 lakh 50,000. On 10 lakh 50,000 at the rate of what rate? GST 18%, which is equal to 1,89,000. So 1,89,000 GST or 90,000 GST, which is economical in the given case. Go with the commission basis. Do not opt rule number 32 sub number 3, which is not economical here for you. In the tax planning, in the given circumstances, you can decide by referring the values which is economical. That can be adapted and proceed. Tax planning should be in advance before commencement of the activity. Now please come back. Further referring here, insurance companies, rule number 32 sub number 4, like life insurance. Life insurance is to offer premium risk plus saving. Saving nothing but what you know, my dear friends, refundable deposit. Saving nothing but refundable deposit. Refundable deposit, not a consideration. No, not a consideration. Why not a consideration? Refer the definition for the term consideration, which is a refundable deposit cannot be considered as consideration. In that case, what is not a consideration, we should not levy the GST. Now, in the case of insurance companies collecting the premium, life insurance premium, covering risk plus saving, let us say 1 lakh rupee premium collecting. In that case, 80% is, for example, is a refundable deposit. So 80,000 rupees, 80,000, deduct the balance 20,000 is a taxable supply. Suppose if refundable deposit, what refundable amount not able to guarantee exactly, accurately able to communicate in the case of risk plus saving, in that case, for the first year premium, 25% of the premium is equal to value of tax supply. Subsequent year and years premium, 12.5% is the value of taxable supply. In the case of single annuity premium, namely premium is paying only one time to cover the maximum number of years. In that case, 10% of the premium is equal to value of taxable supply, where the returnable amount not able to inform exactly how much it is. In that case, the rule number 32 sub number 4 says that 25% of the premium for first year is the value of taxable supply. For the subsequent year onwards, 12.5% is the value of taxable supply on such premium. In case of single annuity premium, 10% of the premium amount is equal to value of taxable supply on which pay the GST. Is the way in which the life insurance services, where life insurance offered premium risk plus saving, is the way in which to be taxed. Further, my dear friends, very important to note this rule number 32 sub number 5, a margin method. This margin method concept will be explained to you by tomorrow at 6 a.m. At this point of time, conclude session. Thank you, my dear friends. Have a good day. Thank you. Thank you. Welcome, Amma. Welcome. Welcome.